People spent years asking when SpaceX would go public. Financial analysts debated timelines. Reddit threads ran for thousands of comments. Retail investors refreshed their brokerage apps like they were waiting for concert tickets to drop. And somewhere in the middle of all that noise, almost nobody stopped to ask a much stranger question. What if it was never supposed to? Not never supposed to yet. Not never supposed to until the timing is right. What if the IPO was always the point, and going public was never actually part of it? Sit with that for a second. Because once you see it, you can't really unsee it. Not the beginning of SpaceX, the beginning of the story that was sold around SpaceX somewhere around 2015. A very specific narrative started circulating. It moved through finance Twitter, through tech blogs, through earnings call commentary, through the kind of breathless CNBC segments that age like unrefrigerated milk. The narrative was this: SpaceX is the last great company you can't invest in, and it worked beautifully. Not because it was false, exactly, but because it was incomplete in a very deliberate way. Think about what that framing does to a person. It takes a company, which is just a legal entity that moves money around in organized ways, and it turns it into something scarce, something exclusive, something that the average person is being denied access to, specifically because they're average. The psychological machinery here is almost elegant. You're not just being told this company is valuable, you're being told this company is valuable, and you can't have it, and the people who can have it are not people like you. That's not a financial pitch. That's a tribal identity trigger. And it worked on a lot of very smart people. Every year, some version of the same article would get published. Will SpaceX IPO this year? The answer was always some variation of probably not yet, but soon, which kept the story alive without ever requiring it to resolve. The media got clicks. Elon got mystique. The early investors got to feel like members of a club that hadn't opened its doors yet. And retail investors, the people refreshing Robinhood, the people in the Discord servers, the people who had already missed Tesla and were desperately looking for the next thing, they waited, patiently, for years. There's a specific kind of financial pain in that. It's not the pain of losing money, it's the pain of being kept outside a party that you can hear through the wall. And that pain, it turns out, is an incredibly effective leash. Now here's where it gets interesting. While the public was waiting for the IPO, that was always just around the corner, SpaceX was doing something that doesn't get discussed nearly enough. It was raising money constantly, quietly, at valuations that would have seemed like satire 10 years ago. By 2024, SpaceX had raised somewhere in the neighborhood of $20+ billion in private funding. The valuation had crossed $200 billion. It had become one of the most valuable private companies in human history. And it had done all of this without giving a single retail investor a single share. Pause on that. A $200 billion company, built, funded, and operated entirely outside the public markets. The traditional logic of going public, you need access to large amounts of capital, and the public markets are how you get it. That logic did not apply here, because SpaceX had something better. It had a story, not a story in the dismissive sense, a genuinely compelling one. Rockets landing themselves, humans going back to the moon, Mars as a backup plan for civilization. The kind of narrative that makes normally cautious institutional investors feel, briefly, like they're funding the future of the species. When your pitch deck includes the phrase multiplanetary civilization, your cost of capital drops considerably. Sovereign wealth funds, private equity, strategic investors, they lined up, not because the numbers were conservative and the projections were cautious, but because the story was large enough that the numbers almost felt beside the point. Apparently, profitability is now considered a legacy feature. And here's the thing about that, it's not necessarily irrational on the investor side either. If you genuinely believe SpaceX becomes the infrastructure layer of the off-planet economy, then worrying about quarterly margins is a little like complaining that the railroad doesn't turn a profit during the part where they're still laying the tracks. The investors who got in weren't stupid. They made a calculated bet that the narrative was real enough to generate returns before it needed to be tested against reality, which is a very modern kind of logic. Starlink gave SpaceX something that most moonshot companies never managed to find: a way to be commercially viable and narratively wild at the same time. Most companies have to choose. You're either a growth story or a cash flow story. SpaceX, somewhat improbably, became both, which meant it needed the public markets even less than it did before. The IPO wasn't just unnecessary, it had started to look like a downgrade. Brief pause. It happened as part of a much larger structural shift, one that most financial commentary treats as a footnote when it should probably be the headline. The IPO used to be the moment. It was the point at which a company went from private ambition to public reality. The moment the numbers had to be real, the disclosures had to be honest. And ordinary people with ordinary brokerage accounts could finally participate in something they'd been reading about for years. That mechanism, imperfect, sometimes chaotic, but at least nominally accessible, has been quietly replaced. Not abolished, replaced. What replaced it is a system where the best returns happen before the public is ever invited in, where venture capital and private equity capture the early growth, the part that actually moves the needle, and by the time an IPO happens, the interesting part of the story is already over. The IPO, in this model, is less of a beginning and more of a liquidation event. It's the moment the early investors get their money back. From you, this isn't a conspiracy theory. It's just how the incentive structure works. The people who get in at Series A aren't doing you a favor when they let you buy shares at the IPO. They're doing themselves a favor. You're the exit. That sounds harsh. It's meant to, because the uncomfortable truth about modern capital markets is that the fiction of democratized investing, the idea that ordinary people can participate in the creation of extraordinary wealth, has become increasingly disconnected from how wealth actually gets created. The money is made in the private rounds. Behind closed doors, with term sheets that include protections ordinary investors will never have access to and would probably struggle to understand even if they did. By the time the company rings the bell at the New York Stock Exchange, it's often not a beginning. It's a transfer. And SpaceX, whether intentionally or not, has just decided not to bother with the transfer. Which raises a question that nobody is really asking. If the IPO is the part where insiders get liquid and retail investors buy the story, what does it mean that SpaceX has stayed private? Does it mean the story is still building? Or does it mean something more uncomfortable, that the people inside have looked at the public markets and decided they'd rather not deal with them? Because this is where it gets genuinely strange. SpaceX is valued at over $200 billion. That valuation is not derived from a publicly audited, publicly disclosed financial model that anyone can stress. It's derived from what the last private investor was willing to pay, which is a number, but it's a very specific kind of number. It's the number that the most optimistic buyer in the most recent negotiation agreed to. That's not the same as market value in the traditional sense. It's closer to a high score. It represents the top of the bid stack at a single moment in time among a very small number of participants under conditions that are not public. You could call that a valuation. You could also call it a narrative with a dollar sign in front of it. Both descriptions are accurate. And this is where SpaceX connects to something much larger, the AI economy, the startup economy, the general vibe of the last decade, where companies with no profits and limited revenues have routinely been valued at numbers that would have seemed like a misprint 10 years ago. OpenAI, valued at over $100 billion, not profitable, burning cash at a speed that has been described charitably as ambitious, valued on the basis of what its technology might eventually become inside a competitive landscape that changes every 6 months. Anthropic, similar story. Built on the premise that AI is transformative enough to justify numbers that no traditional financial model could support with a straight face. The AI companies are the new, which is to say, they are valued on narrative, funded by believers, and insulated from the kind of accountability that comes with public markets. That's not necessarily wrong. Sometimes the narrative is real. Sometimes the technology does change everything. Sometimes the numbers eventually catch up to the story, but it creates a system where the public, retail investors, ordinary people with 401 kiloseconds in brokerage accounts are permanently downstream of the value creation. The growth already happened in a room you weren't in. You get to buy the story after the story has already been written. Space exploration, unlike breakfast cereal, is surprisingly expensive. And unlike breakfast cereal, you don't get to decide if you want a bowl until someone else has already eaten most of it. Or it can do secondary sales, private transactions where early investors sell their stakes to other private investors. Without the public ever being involved, SpaceX has done secondary sales repeatedly at escalating valuations. Employees have been able to cash out, early investors have been able to exit. The company has provided liquidity to insiders without ever touching the public markets, which means the IPO, the mechanism that was supposed to be the moment when ordinary investors finally got access, isn't even necessary as a liquidity mechanism anymore. The insiders can get liquid, the company can raise capital, the valuation can keep climbing, and none of it requires you, because this dynamic private markets replacing public ones, narrative replacing fundamentals, insiders getting liquid while retail investors wait for an invitation that may never come. This isn't just a SpaceX story, it's the architecture of how modern wealth gets built. And once you see it operating in one place, you start noticing it everywhere. Tesla, the early Tesla story, was about more than an electric car company. It was about a cult of competence around a founder who seemed to operate on a different timeline than ordinary executives. The stock did things that could not be explained by earnings. It went up because people believed, it corrected when the belief wobbled. The fundamentals were almost beside the point. That's a new kind of asset. Not a company, exactly. More like a leveraged bet on a person's ability to keep generating narrative faster than reality can catch up. The SpaceX IPO promise fits perfectly into that ecosystem. It's a narrative asset. Its value comes not from what it is, but from what people believe it might become, and from the fact that the belief itself has commercial utility. As long as people think SpaceX is going public someday, that belief does something. It sustains interest. It drives press coverage. It keeps the brand alive in the minds of people who will never hold a single share. The IPO may have been less of a financial plan and more of a bedtime story for retail investors. Let's slow down here for a moment, because there's a specific feeling that comes with understanding this clearly. It's not anger, exactly, it's something quieter and more unsettling. It's the feeling of realizing that the rules of a game you thought you understood have been quietly rewritten. Not maliciously, necessarily, but structurally, systematically, in ways that are perfectly legal and in many cases technically disclosed and still somehow invisible until you're looking directly at them. The promise of the public markets was always partially fictional, but there was a time when the fiction was functional, when IPOs let ordinary people participate in real growth, when the stock market was a mechanism for wealth distribution, not just wealth transfer. That time didn't end all at once. It eroded, slowly, quietly, through structural changes in how capital flows, through the expansion of private markets, through the increasing sophistication of the people who understood the system and the increasing complexity of the system itself. What SpaceX represents, in this reading, is not a company that broke the rules. It's a company that understood the rules better than almost anyone else, and used that understanding to build something extraordinary without ever being accountable to anyone who wasn't already in the room. You can admire that. A lot of people do. You can also notice that extraordinary and accountable are not the same word. Here's what the broader picture actually looks like. Venture capital has raised more money in the last 10 years than in all previous decades combined. Private equity manages assets measured in the tens of trillions. The secondary market for private company shares, the market where insiders sell to other insiders, has grown into a multi-hundred-billion-dollar ecosystem. Meanwhile, the number of public companies in the United States has been declining for 2 decades. There are fewer companies listed on American stock exchanges today than there were in the mid-90s. Not because fewer companies exist, but because going public has become less attractive relative to staying private. The public markets have become the backup plan. You go public when you need legitimacy, or when you need an exit for investors who've waited long enough, or when the private market can no longer absorb your scale. You don't go public because you need the money. You definitely don't go public because you feel some obligation to let ordinary investors participate in your growth. That obligation, if it ever really existed, has been quietly retired. The current AI boom is being funded almost entirely through private markets. The most important AI companies in the world, the ones building the systems that will either transform civilization or collapse under their own weight, possibly both, are private. They are funded by sovereign wealth funds, by major tech corporations making strategic investments, by venture capital firms with 10-year fund horizons and no obligation to explain themselves to anyone outside the partnership. The public can watch. The public can read the blog posts and follow the executives on social media, and get very excited or very scared depending on their disposition. The public can participate as users and as subjects, but as investors, as participants in the actual financial upside, Not really. Not in any meaningful sense. By the time these companies go public, if they go public, the growth curve will look like the part of the SpaceX story we're in right now. The interesting phase will be documented history. The valuation will be enormous and justified by a story you've already heard. You'll be buying the book after everyone else has already read it. There's a specific kind of exhaustion that comes from watching this repeatedly. The hype cycle. The private funding rounds covered like sporting events, the valuations announced with the gravity of geological discoveries, the promises of democratization that never quite materialize into anything you can actually own. It's not that the technology isn't real, sometimes it is. SpaceX builds rockets that actually land. OpenAI builds systems that actually work. The hype is not entirely disconnected from reality, but the gap between the story and the access to space between this is changing the world, and here is how you participate in the financial upside of that change. That gap has become so wide that it now functions as its own kind of product. You're not being sold a stock. You're being sold the experience of proximity to something that feels important. The newsletter, the YouTube video, the podcast, the tweet thread, the "I've been following this since the early days" energy. That proximity is real, the feeling is real, the cultural participation is real, the equity is not. So where does this leave us? SpaceX is currently valued somewhere above $200 billion. It has no obligation to go public. It has access to essentially unlimited private capital. It has a revenue-generating subsidiary in Starlink that funds its more speculative ambitions. It has a founder whose personal brand functions as a force multiplier on every announcement the company makes. It doesn't need an IPO. It never really did. The question is whether the IPO promised the years of someday, when the timing is right, was a genuine intention that got indefinitely delayed, or whether it was always something else. A marketing asset, a retention mechanism, a way of keeping a large audience emotionally invested in a company they have no financial relationship with. Probably both. These things are rarely purely one thing. But here's the thought I keep coming back to. The most successful companies of the next 20 years, the ones building AI infrastructure, space logistics, synthetic biology, energy systems, they may never go public in any meaningful sense. They'll raise private capital, generate private returns, create enormous private wealth, and the public will watch. Not from the outside, exactly. From the feed, from the comment section, from the brokerage app that offers fractional shares of companies that are already fully priced into their narratives. Maybe SpaceX was never meant to go public. Because once ordinary investors are finally invited in, sometimes the real growth story is already over. Silence.